Good evening. It is April 23rd at 8:20 p.m. on a Wednesday, and I'm going to walk through my thoughts of what I'm looking for tomorrow. May not be in any specific order because I'm going through these as I see them. So, first and foremost, I have, after what was a positive last couple of days in general with price action, especially on Bitcoin, pull up Bitcoin first then before I talk about something else here. All right. So obviously Bitcoin, this nice move up here, cool, up to this level, right at the top of when the crypto stockpile, shitcoin, whatever it was announced, and this was the top, and then the sell-off. So that was a Sunday back in March. It's crazy how long ago that feels. So we're right at that level right now, just for some perspective. Stocks, so we're there, Bitcoin. Let's put Bitcoin aside. Stocks also had a decent last couple of days, ran into ran into resistance up here at this key level. We have to remember too, stocks aren't above Liberation Day. Some are. We'll just say indexes, at least the S&P 500, it's up here. Not even right before this candle as well, but it doesn't matter to me. Like for right now, that's like kind of the area for me. If like, all right, I'll start thinking about things differently, is up here. Otherwise, I still have to think we're doing something down here. Okay. That's that. I'm going to skip over the NAS. Don't care about that. All right, gold. So we're going to jump to gold really quick. So gold is just a monster. And I understand, I agree that the top was perfect when Goldman and your other insert investment firm was calling for 4,000, 4,500. But I still think it's something we got to pay attention to. Because, well, one, the reaction tonight is I wasn't expecting that. And this is coming off of the semi-undoing of the earlier conversations or the communications around what the tariffs were. And now going back on it, regardless of details, don't care. It's just the constant uncertainty and the lack of clarity is what's having the markets be at unease. So I can't see any positive alignment of clarity on what that is tomorrow, because that was the purpose of the conversation this morning with the Treasury Secretary. So anyway, so on that note, I believe just in general, and that'll lead to my overall thesis for the night, is that if anything, I believe we get a move up tomorrow, a squeeze on risk on assets, and then sell off. So I'll go back and retouch on those in a minute, and then speaking equities and crypto. But the reason about gold right now is because gold also too is a confluence for that. And I'm getting alerts going off right now as we speak here. Sol. Let's go look at Sol. But we're going to go back to gold in a minute. Hold on. All right, I'll talk through this then, actually. So this is a setup I had for Sol that I was looking for right now. Was either Sol was going to just inevitably going to come down. What I was hoping for, is actually what I was leading to a minute ago, was that hopefully getting some squeeze up, like one last effort here. And I'm not saying this pullback's going to come and retrace everything that was done the last day. No, let's see some, if I zoom out, let's look at Bitcoin, like for Bitcoin itself. You know, if I was considering getting long, which I'm not, if I was, at this case here, if I zoom out, would want something like this. Right, just like that. Nothing crazy. Pull back into like the 90s, high 90s, high 80s, maybe a little higher. Right, so right now what my focus is, or like going to tomorrow, is really like this area. So this area for insert market, doesn't matter what it is, but right now we're doing Sol because Sol is the one I've been following for the most part. So if I go to Sol now, like this is the setup for Sol, where just by looking at a glance from where this was, where I put this out, just assuming a straight line down, or a squeeze up here, which would be nice, which would take out the highs from most of the day today besides this one over on top. And I kind of just saw like an arc roughly when I first saw this. Oh, wrong way. Like this. Sometimes I like looking at arcs like this on the tops. Oh, damn. Just like kind of just giving me like almost like a cove. I don't know the best way to explain it. But anyway, so I see that, because usually does things roll over the top like it. So I want to have this move up in a perfect setup with this squeeze up here, take out these highs and these here. Because whoever caught this is sitting pretty right now, and if I was a market maker, I'd want to come up and I'd want to take them out. That's why I think this squeeze up makes a lot of sense if it still does happen here. So move us over here just like that. and then then down. Now if this comes up and blows up through the top, don't dead to me. Don't care about it right now. We may have bullish things popping up, but I can't see there yet. So as of right now, like I said, I'm still bearish overall. Well, I didn't say that. I am very bearish overall. I think I have like 200 reasons why I'm bearish. But I'm not going to discount that price action was strong yesterday, and we'll acknowledge that. But at the same time, there are other forces at play, market, many other things that makes it difficult for me to have justification for prices to go up. All right, back to gold. So gold today just woke up. Gold's been on the back here, on the pullback. Now, for me, if I was looking at it, would probably want it to be like down here, but then it could take a while, or it could even come down here. But the reason it's doing this is like, this is a sweet spot for me, is if you wanted to, and I'm not implying it's going to do this, but it's going to give you, this would give you more confirmation to be more aggressive onto the downside, at least from the projection of the other, of risk on, that this is something like this. Like just completely just throws everyone off. I don't think Absolute's going to do that specifically, but if it does, that's part one. So that's one part of the equation for me is I'll draw again later, making that move. As of right now, I have to assume that gold is going to continue to do this, but I'm specifically looking for a scenario tomorrow that, if it plays out, I think will be the beginning of a bigger catalyst. But so I don't think that's going to happen. So yeah, so that's that gold. Now I'm going to go to oil. Oil also to me, look at that. This has been some area of my focus, because oil to me is a good gauge for the strength of the economy. Like probably one of the most real indicators, at least for me, just generally, I'm not trying to get too specific, on just demand. Like you need oil for things to work, for things to go. So this is accurately reflecting, and I know there's other variables that do impact price on the supply side, but from the demand side in general, this is the realest view that I think I have for like the state of the economy as a whole. And this breakdown here to me was the first signal of like really where, okay, we're heading into, a contractionary environment. So this pull down with oil and this bounce up, like forming a, picture perfect rising wedge in a way. And most patterns I don't follow. There's a couple that I do, and like wedges, like to me, rising, ascending, descending wedges are one of those. So to me, looking for a short, or really was up here, the area of weakness is the target area. Also too with oil, because I have a couple scenarios, this could do something like this and then roll over. But as of right now, after today, I don't think that's possible. I think that's going to continue to go down. So this would be condition number 2, is gold pumping, oil pulling back. Now the last two aren't absolutely critical. They're almost like bonuses. And I say bonus point towards how fast the other markets come down. Now, just for the record too, I don't want markets to act this way. I want markets to become stable, because the way they should be. But hey, we're here to just read the markets and trying to get a gauge where things are going to go. That's how I'm looking at it. So these other two pieces are bonuses, and that is the dollar. So the dollar itself is extremely weak. The dollar lost its big. Where was the range the other day? Oh, actually, yeah, here we go. This actually is perfect. This is perfect. I didn't look at this chart. So I'm going to do a rewind here really quick to here. And then I'm going to draw a range. Let's call it a range. This color's not proper either, but I don't want to spend too much time on it. All right, let's call this a range, right? Big breakdown, then going sideways. More red flags for me went off is when this broke down here. See, it fell down at the bottom of that range. I thought I was just recording this entire thing on mute. I was going to lose my mind. So watch this now. So the good part is it came back up, and it's going to give us good perspective because of this range here. Just want to stop this. Come on, bro. Here, at the end. Okay. So now at the end. So I'm going to move this over like this. So the dollar being weak for multiple reasons is not good in general for overall global markets. I'm going to, right now, I'm using it as a gauge of trust in the U.S. system, although it has many different purposes, but just in general, all things considered, that's how I'm looking at it. And anything under 100, just as like a gauge, or really below this where this broke down, is not in the area we want to be. So this is the other scenario where I see that downward momentum happening, is that the dollar weakens further, and also coupled with the rise in yields. So treasuries right now are looking bullish. I expected to pull back further, but today, after it was actually, no, this was this morning. This morning is when I started seeing these start popping up, which was the first time in a couple days. And so if I zoom in here, so this is at a key level. So 4.43 on the 10-year is a key level to me. And although I was expecting like something like this to happen and then a move up, the strength that was here made me now reconsider. And not, again, this is just, again, more confluence to the expected bearish move by equities and crypto in the short term. In the short term, I'm talking like 24 to 48 hours. The severity of it, TBD. I said, just to go back to the beginning again, don't circle back here. I know I've been saying a lot. Oh, here is that this is the focal area right here. So Bitcoin, let's say from the top here, from the highs, 5%, 6% pullback. From where the price is right now, 4.5%, 5%. That's basically the target to start. Okay, I think that's it. So hope everyone has a good evening, and remember, also too, this is not a good time for anyone to be trading. If you don't know what you're doing, do not trade right now. We are in unprecedented times, and getting clarity on where things go is just not there. So you're basically asking to lose a trade, to get stopped out. This is absolutely a trader's market, but a more seasoned trader's market. Coin or tweet, everything can change. So just keep that in mind. Wait for clarity. Best thing you can do right now is to preserve capital, sit in your hands, and just watch all this play out and look for good opportunities. And learn something. This is a good time to learn, because we are in a bear market. Felt the way for a while, and we'll continue to feel that way until we have more clarity and confluence that we're not in that environment. That's it. So have a good night. The price is on the can.